Hi everyone, it's Matt Barnes here. I'm the lead trainer at Safety in the Market. And this week, one of my students asked me, Matt, are we heading for a recession? Well, before I answer that question, you might be wondering why that's important to you. If you have a job or a mortgage, or you run a business, or you're planning to retire in the next 5 to 10 years, a recession could have a massive impact on your finances and on your quality of life. The technical definition of a recession is 2 consecutive quarters of negative GDP growth, but in simple terms, it just means the economy is going backwards. Business is bad, people don't have money to spend, and business owners start looking to save money, usually by cutting hours or cutting jobs. When the business outlook's bad, share prices tend to go down, so even if you manage to keep your job, your wealth goes down too, because regardless of whether or not you directly own shares, most people, especially here in Australia, have at least some kind of exposure to the stock market through their superannuation or their retirement accounts. So you can see why the question, are we heading for a recession, can seem like an important one for many people. However, my answer to that question is simply, I'm a trader, not an economist. An economist's job is to look at economic data like GDP, like inflation, like the trade balance, and then try to project future economic growth. A trader, on the other hand, looks at market trends and trading setups with one goal in mind, and that's to profit from any opportunity, whether it's in a market that's going up or a market that's going down. In fact, many traders actually prefer to trade in falling markets because markets fall 2 to 3 times faster than they rise. And this is why trading, if you can get it right, can be a recession-proof business. But let's look at an example. Here's a chart of the Japanese stock market index, the Nikkei. I'm sure an economist could tell you plenty of things about the Japanese economy, but all I can tell you is that the double top formation that occurred in January and October of 2018 is one of the 4 kinds of very high probability market setups that we discuss in our active trader program coaching. Double tops and double bottoms have always been worth watching, but this particular double top had a couple of other very strong things going for it that indicated the Nikkei was likely to turn down. And so far, that's been the case. And a number of our traders have actually made good money trading this market short. However, as I said, I have no idea about the state of the Japanese economy. All I do is read the chart, look for high probability setups, and trade the probabilities. David Bowden, the founder of Safety in the Market, would be the first to admit that he wasn't an economist, but David made a fortune as markets fell in 1987 and again in 1989. And then as people were panicking in 1991 and the Gulf War was just starting out, David actually called the low of 1991 and made money as the market rose. So if you know what you're doing, trading can be a recession-proof business. So if you're wondering, are we heading for a recession? You're probably better off asking an economist. But if you're interested in getting into a recession-proof business and you'd like to learn to trade recognizable market patterns, regardless of whether the economy is good or bad, and regardless of whether the markets are going up or down, you can enroll in our active trader program, or if you're already one of our students, you can check out one of our webinars or coaching programs on the Safety in the Market website. Don't focus on the next recession, just focus on the next trading opportunity. Thanks for watching this video. If you enjoyed it, please click on the like button below and subscribe to our channel if you haven't already done so. Thanks again for watching, and we'll see you in the next video.